Hey everyone, thank you for having me today. I'm Cindy. I'm the co-founder of Drift Protocol. We are the largest derivatives exchange on Solana. Can I maybe get a hands up here of who's used Drift before? Okay, some folks out there. And how many of you guys are leverage traders, or you regularly trade perps? How many of you like to use lending products on DeFi, or lending products at all? Okay, we have some savers in the audience. Today I want to go through 3 key topics. One is our Asia strategy and how we've been thinking about that. I want to go through what our super protocol vision is. It's a word that isn't thrown around a lot. And so I want to explain to you how we think about capital efficiency, how we think about growth and our advantage over other DEXs. And lastly, I'll go through a 3-part plan and big vision on how we plan to unseat the financial industry. So let's start with why we exist in the first place. The reason that that motivates us to grow as hard as we do today is that a lot of financial systems still live in enshrouded centralized rails. Every single application today requires you to put in KYC details and to compromise essentially your own privacy in order to have access to lending, borrowing, even things like leverage trading and spot trading in Korea and in Asia mostly. In the US as well, every single financial service is limited to those who are willing to put up their information essentially. And we think that this needs to change, right? That's why we're all here in crypto. Fundamentally, if crypto exists, then why do most crypto transactions still happen within centralized rails? So it's very clear why DeFi needs to exist, but it's also clear that DeFi is not, but just being permissionless and just being transparent and just not requiring KYC, it's not enough as a product. You guys wouldn't, move from one product to another just because we don't require KYC, right? You would move from one product to another if it's fundamentally a better product. So permissionless alone is not enough to bring people over to the DeFi environment. Being transparent is good, but it's not enough. What do we need to get there is what we consider capital efficiency, and to have products that are actually one-to-one with and better than what you see in the traditional financial ecosystem. And we believe that a big reason that DeFi hasn't scaled today is that it has not been capital efficient, and I can explain why in a little bit. Before we dive into capital efficiency, I want to talk very quickly about Drift's history and where we started. We are a pretty old project. We started in November 2021. And we initially started just as a simple perps formula that enabled you to go long and short with leverage. So you were able to get exposure to crypto assets like Seoul, BTC, and ETH with 20x, 30x leverage. And it was a very simple long-short buy-sell button. We shipped that after 6 months of initial development. We very quickly realized that the big demand from our users was that they wanted to use the cross-margining function that centralized exchanges and brokerages typically has, which enables you to use assets that are like Sol and BTC without selling them into USDC in order to get exposure and to trade perps. So that was a big unlock for us when we realized that the market need was that people wanted exposure to the underlying crypto without needing to sell into stablecoins to have to trade perps. Previously, in all DeFi exchanges, and even today, you still need to use stablecoins as settlement and stablecoins as collateral. But we think that huge efficiencies are unlocked by having things like BTC, so that traders can go take a BTC position, short BTC against it, short BTC perps against it, and create delta neutral positions. That doesn't exist in DeFi today until we shipped our V2 back in 2022. So we ran that for, that's been operating, that's still operating today. But we also discovered a new customer segmentation, which was users who preferred to earn. With cross margin, what this also unlocks is that there is more yield opportunities now on the exchange. When you have BTC and SOL type of collateral, you actually have new opportunities to earn yield on all of those assets. So by depositing BTC and SOL into Drift pools, you're earning the yields from perps as well as borrowland yields. So we package this into a earn product, we call it Drift Earn, where you can earn yields from insurance fund, you can earn yields from staking, you can also earn yields from borrowland as a part of being in the perps pool. And I'll get to the point in a bit, but this all points to the fact that we've built a product that is truly a super protocol underlying it and allows you to use a single pool of collateral to do a lot of things all in one. And this is a quick introduction into our big product suite. As I mentioned earlier, we started off as a very simple perp DEX, where all you could do is trade, long and short. And since then, we realized that a market need was a truly composable product where you use a single pool of capital that funds and is usable for multiple different products within the same pool. Let me explain how this works. So imagine you have $100. You can deposit it into Drift. That $100 is automatically earning about a 5% yield today from a borrowland pool. So think of it as a pool that is similar to Aave, but also gives you access to the 4 different products that we have. It allows you to use that $100 to trade derivatives with over 101x leverage. It allows you to trade prediction markets. It allows you to trade an AMM, long and short, on token swaps. And then we also have a strategy vaults product where you can deposit and earn yield from other traders trading on behalf of you. So all this summed up together, if there is one slide to show that, is that we are positioning ourselves as an all-in-one DeFi prime brokerage protocol where you can use Drift as an intermediary and a big liquidity pool to be able to do all the things you need to do in the traditional finance world. And we think that this is working out really well. Our users are really happy with the ability to be able to use collateral in so many different ways. You don't have to take your funds out of a borrowland pool if you want to leverage trade it. You can actually even take out your borrows and use that to fund mortgages and automobile loans, which is a crazy real-world application. But in 3 years, we managed to hit some pretty crazy numbers in terms of growth. We've hit over $1 billion in TVL, 1.5 in deposits. We've hit $60 billion in volume traded. And we represent the perp exchange that has the most markets listed and the most collateral listed in crypto. And this goes to show, and this is only 10% of the way there. This goes to show how much further growth that we have with being able to list everything in crypto and also outside of crypto. The big takeaway from the capital efficiency argument here is that Drift creates capital efficiency on chain by putting your brokerage account and your earn account inside a big deposit account, which enables you to have access to so many different products within your single deposit account. I'll go through some of the features in more detail here. But the biggest use case that we have for the super protocol vision right now is earning. So we all have a vision of wealth generation and wealth compounding, especially in places where it's really hard to be socially mobile. Everyone is extremely conscious of how to actually earn money in crypto. However, if you're just buying spot and you're leverage trading, hoping to make it, that's one way to make it. But the other way to make it is to be a bit more prudent and to find ways to compound your wealth without compromising on decentralization. So our Earn product was built exactly for this audience that is looking to generate wealth in a more sustainable way. We have many different products within Earn where you can deposit USDC into our strategy vaults, which represent on-chain hedge funds, where in the real world, you would have needed $100,000 minimum to deposit into many of these hedge funds. You would have needed to sign paperwork and go through setting up entities in order to even be able to get access to these hedge funds. On Drift, you get these same returns and same access to hedge funds by simply depositing a button and connecting your wallet. So our mission here is really to democratize tools that were previously only available to ultra-high net worths and to family offices, to everyone in the world. And that, to me, is the big vision of crypto. It's the ability to package these complex DeFi products and to give access to anyone. And these are some of the examples that I mentioned. We also work with many ecosystem projects that allow you to be able to deposit into these products. For instance, Leow is a great example. You can deposit your funds into Leow, and it automatically routes your funds to the best earning pool with the highest APR. So you don't have to do the thinking yourself. Squats is another great example. It's a multi-sig product where the multi-sig product automatically deposits your funds into Drift, enabling you to earn yield in a very safe way without compromising on holding your funds in a multi-sig. The second big use case here is obviously trading. Everyone, well, there are not many traders in this room, maybe more after this presentation, but with Drift, you can use any collateral type to be able to trade with 101x leverage. And the way that we do this is by assigning margin to every asset in the pool. It's done in a very risk-managed way where the more volatile assets still get some percentage of margin, but you get a proportionally lower margin if you're on the riskier spectrum. For instance, if you're trading with Bonk or some fart coin collateral, you might get 20% of the margin allocated to that collateral, but if with USDC, it's 100%. So if you look at this account here, you'll see that it consists of many different multi-collateral types with Drift, Seoul, BUIDL, and USDC, and that comprises of your margin account that users can then use to long and short on perps. The cool use case here is that you can also build delta neutral positions. You can build our positions using different types of collateral without needing to ever sacrifice your upside with holding crypto. Now, the very cool thing in this model is how it actually impacts the growth of the protocol. All of these things are tied together by what we call the Drift flywheel, where traders will generate fees that increase the lending yield for depositors. Now, when lending yield goes higher, we automatically attract more TVL to give as collateral and lower the borrowing rates for traders. So the more trading activity goes on, the higher the yields go for depositors, and the lower the more TVL comes in, the lower the borrowing costs for traders are. So it creates a really cool flywheel where it's up only in terms of TVL and trading volume for the protocol, and creates more revenue for the DAO and the treasury. So our big thesis here, to sum it up, is that we think super protocols that have multiple functions tied to a single collateral pool will eventually overtake the same protocols that exist in isolation. And this is for primarily the reason that I mentioned earlier at the beginning of the presentation, which is the concept of capital efficiency. Having $1 and have it stretch across multiple functions instead of needing to withdraw it, deposit it into multiple places is a huge unlock. And if you've tried to use the exchange and the product, you will feel the difference in terms of why super protocols will ultimately overtake isolated protocols in growth and the long-term trajectory. We can even consider where we go from here. There's infinite ways that this super protocol ecosystem goes in terms of vertical and horizontal integration. For vertical integration, we can see the growth of the super protocol ecosystem in terms of payments and building out OTC products on top of the product. So the cool thing about Drift is it's fully open sourced. So anyone can build a new front end and new product on top of it and take advantage of the cross-margin liquidity that we have built out. Imagine having a Drift card that allows you to spend using borrows from your collateral. You can have Seoul LST sitting there and USDC borrows open against it every time you make a purchase. That, to me, is the future of how these super protocol ecosystems will grow. On the horizontal integration side, right now we have perps as our primary derivatives tool. But imagine having this with FX, with options. We recently just launched gold contracts today. So the more markets that we have and the more growth real-world assets we bring onto the platform, the bigger the ability for you to cross-margin anything in the world within this Drift ecosystem. I want to highlight also some of our partners in our ecosystem that have done a great job at building out products and front ends on top of Drift. One major one that's about to launch is called Ranger. They're a perps aggregator that essentially routes order flow through to Drift, Jupiter, and Adrena at the moment. So they basically find the best prices and route these orders through and effectively act as a front end for traders to use Drift. We found that 60% of their orders now go through Drift because the fees are the lowest, the leverage is the highest, and the liquidity is the best. So we are very excited to continue to support many ecosystem projects. We also just launched an accelerator called Momentum, where we're working with 5 of the top DeFi, seed stage DeFi projects building on top of Drift to help them scale and help them to reach unicorn TVL and grow far beyond what we've envisioned. I also want to touch on very quickly our recent launch of isolated pools. Isolated pools are a way for you to use different types of pools within Drift that are outside of the main cross-margin pools, but also enable more concentrated borrow-lend activity. So one example is a Seoul LST isolated pool that we just launched that enables you only to margin borrow against Seoul LSTs. That increases the LTV of that position and enables more efficiency to take place outside of the main pool. Our recent LST launch has already attracted over 200 mil in TVL over the last 2 months of growth. And to peel it back and just to see how small DeFi is at the moment, we have about 200,000 users at the moment. Solana in itself has something like 1 mil users. DeFi, 2 mil, Binance, 20, Robinhood, 50, and we have 200 mil, let's say, in a very conservative estimate, US stockholders. If you look at the true opportunity set for a DeFi protocol today, especially one that's considering the big stage of being a super protocol and having multiple functions in one, we are a very tiny fraction of where DeFi could go. And so I'm really excited to show you guys where we plan to go from here, because so many DeFi protocols these days, I think, lack the true vision of how to get to this future of becoming the de facto financial ecosystem that is used by the majority in the world. And I want to present to you a 3-part vision in how we see that happening over the next decade. The first phase is the phase that we're currently in, which is building out the DeFi protocol, building out the infrastructure layer. Everything that I said to you today has been related to infrastructure, right? Relatively technical. We talked about LTVs, borrow land so many times, but that is just the infrastructure. As a consumer, we want to take the next step to actually build large-scale consumer apps that act as a consumer layer feeding into the infrastructure layer, right? In order for DeFi to truly scale, it needs to have great products that are enshrining underlying open source technology, which is why we've spun out multiple product arms to act as new front ends. We're actually going to be working with more and more front-end developers and launching a mobile app to be able to take advantage of this ability to use open source infrastructure to route orders through. So the second big phase that we see is how do we build a large-scale consumer app, and not just one, but multiple, that all connect to the same smart contract. And the third and last phase that we see is to build a super protocol that ultimately powers new banking and financial front ends. We want to go beyond just being a neobank and being a Robinhood style exchange that ultimately stops where it's at. We want to change the way that banking and financial systems work, not just the front end itself. And we think that with the infrastructure that we've built, with the benefits of DeFi, this is not that far away. It may sound outlandish today, but we have a very strong pathway to getting there and hitting the 1 billion user mark. So with that, I want to talk a bit about what we've been up to and what our plans are for the rest of the year. In Q1, we launched Swift, which is a market maker to a direct market maker channel. And if you've tried Drift in the last month or so, you'll see that the orders actually are almost as fast as a centralized exchange. It's significantly faster than before because we've launched Swift. I would strongly urge for you guys to try it out because it truly does not feel like a DEX anymore. The biggest unlock is that the growth in the technology on the Solana and technology side has really outpaced the user growth as well. And we're starting to see why I'm so bullish. This phase 2 and phase 3 vision is that the underlying technology has improved to the point where you don't even know that you're trading on a DEX anymore. In Q2, our big focus is mobile. Our big focus is also on building out an institutional product where we're bringing on more RWA assets into Drift and enabling you to margin against it, building on institutional borrow lend and credit facility where you can use things like private credit that are earning 9-10% in the real world, bring that onto a DeFi platform to borrow stable coins against it. And in the rest of the year, our big plan is to really scale. There's infinite amounts of vault managers to onboard, a lot more RWAs and institutional capital to bring on board. A lot more, there's a secret project in here that I can't share too much about yet, but it will enable you to really supercharge the liquidity on the protocol by simply holding an asset against it. I can share more about this next time, but something great is coming. So I'll end with this note, and that is Drift is not just looking to power the front end of DeFi. Drift has much bigger ambitions than that. Drift is looking to power the front end of the new financial system and the new front end of banking. So I'm going to end this here. I think I'm very over time, but thank you very much for having me.